over 4 years since their inception, growth was their dream. But when Pack and Fresh actually started to grow nearly 50% month over month during the pandemic, one of the first challenges they faced was the shortage of one of their most valuable asset, cash. Hi, I'm Vish, President and CTO at Power Central, and in this two-part series, I'll first explain how we improved Pack and Fresh's cash flows while increasing profitability, how we helped the executive team raise capital when it mattered the most, all using Microsoft Power BI and Azure Machine Learning Service. And in the next video, I'll explain the mechanics of the order to cash process in Microsoft Dynamics 365 Business Central, the data from which most of these critical strategic reports were built. So let's get started. So Pack and Fresh was growing beyond their wildest dreams, but oh no, was running out of cash. And when we looked at the main challenges that were adding fuel to the fire, it was prolonged lead times and minimum order quantities. Because they could no longer, for example, just buy 200 gallons of olive oil from a local source for maybe $2,000 or so, like they used to. They had to go all the way to Italy or other countries to source that raw material, and now had to order 20,000 gallons for maybe $200,000. Not just that, they now had to deal with much longer lead times, sometimes even 6 to 8 weeks. And guess what? Sure, they had a better profit margin because they were buying boatloads in bulk, but the delay between when they had to pay for the raw material to their vendors, Customs and Border Patrol, freight brokers, their expenses, payroll, and when the customers actually paid for these orders was creating a cash nightmare. Early on, the CEO was making frantic phone calls to the investors, and often it was too late, and this was causing a lot of friction. The executive team simply did not have the right tools, sophisticated enough to convince the investors that yes, we're growing like we've never grown before, but what exactly does the cash outlook look like 4, 8, and 12 weeks from now? When exactly is the company expected to become cash positive? Are we even building the right inventory? Because most of these food items are like a ticking time bomb once they enter the warehouse. They could all go bad. And even to raise capital, do they need short-term loans? Or raise more capital from maybe an outside investor to sustain their growth and increase profitability later? Or just negotiate better terms with their vendors? They simply did not have the right data at their fingertips to make these decisions. The executive team simply could not even build these cash flow projections when the CEO and his team were frantically fulfilling orders for the customer. So the first thing we had to convince the investors was that we were growing fast, with potentially much better profitability than we had earlier. Again, please note that most of these numbers that I show in the reports are fake for demonstration purposes only, but the narrative is true. I mean, this kind of situation did happen, and Pack and Fresh is much stronger than before. So for example, we could clearly show that we grew from $23,000 in October sales to $63,000 in November, and all the way up to $134,000 in December, upwards of 100% growth month over month. And our profitability is holding steady, if not getting better every month. And number two, based on the accounts receivable, account payable, payroll, expenses, and even customer behavior like payment delays, what the cash flow projection was going to be 8 to 12 weeks from now. For example, I'm showing here a snapshot of interactive Power Business Intelligence report that reflects the data as of November 29th. So on November 29th, we were able to project all the way into late January. So here with the orange line, you can see that the cash going out of the company from accounts payable, payroll, and expenses. And with the blue line, you can see the cash coming into the company through sales and accounts receivable. And the delta between the two is shown with this red line right here. So we could clearly see that as of November 29th, that our worst cash situation would happen sometime in late December, early January, but we knew that the situation would improve by late January. Not just that, we also were able to convince the CFO and team that the delta in cash that we see here between the orange line and the blue line, was a result of good inventory that we were building up for only the items we knew we could ship out in the next 2 to 3 months. For example, you can see that it is the high volume items like the self-rising flour. We have a healthy level of inventory of the finished item at 4,375 packets and a healthy level of inventory of even the raw material at almost 7,000 pounds when we need it. But if you look at the smoked paprika, which is not very fast moving items, we only have what we need. This report was absolutely critical in building the confidence of the investors in Pack and Fresh's ability to execute well and with frugality. So once the CFO and the investors looked at this report, they were able to make the right calls by getting short-term debt or raising capital. Of course, I'm not able to reveal what they actually did, but I just want to make the point. I also want to make sure that I differentiate this level of advanced reporting and intelligence with rudimentary built-in reports that come out of the box from ERPs like Business Central, say for example, cash flow statement, may tell you a little bit about what happened last month, but they cannot project into the future without using the intelligence tooling that we just demonstrated. Thank you for watching, and in the next video, we'll demonstrate the mechanics of order-to-cash process in Microsoft Dynamics 365 Business Central, which was critical in producing the financial and operations data used in most of these reports. See you soon.